Hey traders, welcome back to the channel. Today, we're rediving into a super important topic that can totally change your trading game. Understanding the personality of different trading pairs, you wouldn't treat all your friends the same way, right? Well, it's the same with currency pairs and commodities. Think of gold as that friend who's always on the move, chasing the next big thing. It's a classic trending instrument. When gold decides to go up or down, it tends to keep going in that direction for a while. Driven by big global events, inflation fears, or changes in the US dollar. So, for gold, strategies like trend following, using moving averages to catch a ride, or breakout trading can be really effective. You want to jump on the trend, not fight it. Trying to pick tops and bottoms with gold can be a quick way to get stopped out. Now, let's switch gears and talk about some different characters. Ever looked at EUR GBP? This pair is like an old married couple. They might have their little spats, but they never stray too far from each other. This is what we call a mean reversion pair, because the economies of the Eurozone and the UK are so closely linked, their exchange rate tends to stay within a predictable range. It moves away from its average price, or mean, and then snaps back. The same goes for AUD/NZD, the Aussie and the Kiwi. These two are neighbors with very similar economies, so their currency pair also tends to be range-bound. So how do you trade these? Instead of chasing trends, you do the opposite. You look for moments when the price has stretched too far to one side of its usual range. Think of it like a rubber band. When it gets stretched, you anticipate it snapping back to the middle. For pairs like EUR GBP and AUD/NZD, strategies using indicators like Bollinger Bands or RSI to spot overbought or oversold conditions can work wonders. You're essentially betting on the price returning to its average. A trend-following strategy that works great for gold could be a disaster on a range-bound pair like EUR GBP, and a mean reversion strategy on gold might get you run over by a powerful trend. The secret is to match your strategy to the personality of the pair you're trading. Spend time studying the charts, understand their typical behavior, and then apply the right tools for the job. This simple shift in perspective can make a huge difference in your consistency and profitability. I hope this breakdown was helpful. If you got some value from this, smash that like button and make sure you're subscribed so you don't miss our next video. Drop a comment below and let me know your favorite pair to trade and why. Thanks for watching and happy trading.